and welcome to the Trading Zone. Thanks for hanging in there with us. I'm Joe T. Gay. With me is Brian Stelton. How you doing, Brian?
Great, Joe. Both of us bringing it to you here from Equity Armor Investments, portfolio managers, and we got a lot on the show today. Wow, what a weekend, Joe, huh? Speaking of Joe, there is no more Joe. so markets are reacting to that, and we got a lot to talk about, right?
Yeah, maybe that was priced in a little Friday. Who knows for sure? There's a lot of movements. Markets hanging in there today. Tech is doing great today for sure. So yeah, let's get into it. There's a lot to talk about. Thanks everyone for hanging in there with us. It's really great to see everybody tuning in again as usual. And let's jump into it as we always do. You know, we're former options market makers, VIX specialists, so we always look at volatility. But like we're talking about this week, huge news in the election. Last week there was, the assassination attempt. Huge news in the election. There's going to be huge news basically every week going forward. I can't believe there's 3 months left of this, and it's going to feel like an eternity. But we just need to remember, people say with the elections, it's the economy stupid. Well, with the market, it's the technical stupid. All these headlines aren't going to mean anything. What's going to matter are how the stocks are moving for our portfolios.
Yeah, and certainly, we'll get into this. Really, the big story of the day for us, which we'll get into later in the show, is exactly that: the technicals, the bull trend that's still been in place. We want to go over some breakdown on that and where that's headed, and is that technical level of bullishness, still on the rise? And really, the answer is going to probably be yes. Don't call it a comeback, but yeah, that might happen for these
Yeah,
stocks
up
that have sold off the
3%
last few
today for
days.
the semis. That's looking huge. They're holding in today, looking really strong. Nasdaq, of course, a big part of that. And yeah, it was like this rotation happening, tech just falling apart. But I think for the rally to really be there, if we are going to turn over, and yes, the short term does look kind of negative. If we are going to turn over and have this short term bearishness turn into medium and long term bearishness, it's going to be because the semis are going to break down first. So we need the semis, we need the tech to balance out here. Really need, if the rally is going to continue, we really need them to lead us.
Yeah, we really do. And that's what we'll really get into later on in the show. But for the week coming up, there are some events to take a look at. That's going to probably be some market movers. GDP obviously will be a big thing. Are we continuing to get growth, or is growth starting to slow a little bit? Because we've talked a lot about unemployment rate, jobless claims starting to tick up. That's another one to watch. All these are some leading indicators in an economic slowdown. So, I'd like to see these earnings continue to be good. And then, of course, Google, Tesla earnings tomorrow. That should be exciting, right, Joe?
Yeah, finally we're getting some tech earnings. We had some bank earnings, some good ones, some bad ones. Tech again, that's going to be the key for me. And speaking of recent sell-off, Brian, good question for you from the audience here. Oops. Got to learn how to click. I'm curious about the tech stocks you've been watching that have sold off recently. Might they be a buy now? Anything on your radar?
Yeah, that's a good question. I mean, I think obviously earnings coming up. We mentioned here Tesla and Google, and actually, the sell-off prior to these earnings might help make the earnings look a lot better, because so many of these names have continued to beat earnings expectations by 10, 15% even. When you look a lot of the top names beyond just the Mag 7, but the other tech AI related names as well. And so this little pause and pullback might be just a carpet shakeout. And if we, out of that earnings event, we get some good guidance, moving forward, as expectations maybe have lowered a little bit in this recent sell-off, that might be a catalyst to push things higher. So, yeah, I mean, I'm not saying one specific stock I'm looking to pick up, but we will get later in the show a trade on Tesla. So this certainly could be one where I kind of like that to the upside, given the levels that it's at right now.
Yeah, and I think we'll get into that in our big story. There's been some weakness recently, to say the least, that's given us a short-term negative pattern. All rallies should be looked at cautiously on the short-term time frame. And just because there's been weakness and there's a long-term bullish pattern does not mean I'm automatically bullish on a lot of these names. What I want to see is some strength from this weakness. I want to see these stocks pulling back, making some good patterns or recovering some levels that were critical to get back above. So I want to see some strength after this resistance. Until then, I'm cautious. There might be some longer levels I'd be looking at, which would be buying opportunities. But right in this kind of no man's land, I need to see a little more conviction from the price action. And speaking of conviction and price action, last week was really negative broadly for the market. We came in last week and it was one of the highest readings in this sentiment of the year, Brian. So there's a big contrarian flag, red flag. People got offside. They were way too excited about these small caps on fire. They were thinking, this rally's broadening out. Everything is great. This is awesome. The economy's great. Rate cuts are coming. Yada yada yada. We stumbled last week.
Yeah, it did. I mean, obviously, people got a little bit too excited, and we've talked about this. Actually, maybe let's just bring this into the volatility zone section of the show here. When we talk about bullish sentiment and bearish sentiment going on in the marketplace, taking a look at the skew index here, this is puts relative to calls, the price of those options, and whether it kind of depicts whether there's more demand or less demand for the downside put and protection on the downside. And certainly over the last few weeks, we've seen this skew index very low, meaning very high demand for calls, not so much puts. But of course, we saw that tick up last week, and put buyers really came into the market. The skew ticked up, but look, I mean, that red line right there, Joe. I mean, we're still making lower highs. So yes, there's some quick panic put buying that goes on, but nothing that has really shifted the trend where bullish sentiment continues to be the onset in the options market.
Bullish sentiment and lower volatility just in general. I think something's got to give though soon. We're making this like lower high here, but like that's all the way over here. Like this was like where the lows were in 2022. So we're still on the low end of this range. I think something might shift, something might break, something might just change, which is going to shift this volatility dynamic. We know there's some big catalysts coming up later, but again, until that happens, we should not, we should just continue on the path.
Yeah, I mean, whether that's something that's changing the economy, where we continue to see, let's say we get an August, a September, October, where unemployment continues to tick up in those 3 months. Now we're really in an area where it seems like there's a trend for higher unemployment rates, which we've been saying, Joe, could be a catalyst for higher volatility. And then you couple that with the election still coming up, and now we're really thrown into, total, almost, should I use the word chaos in who's going to run come November. We could be headed for a lot of volatility. And I think the VIX futures curve is probably kind of predicting that as well.
Yeah, let's take a look at that. This is just a very unusual futures curve, Brian. We have the front month is below the cash, which is unusual. But at the same time, we have this third month extremely steep over the second month and everything else just in general. So remember, that's October is the election month. It prices November options and the S&P 500. So that's why there is that kink in the curve. But this is just an unusual curve. Maybe on the short term, the futures traders are saying, hey, it looks like volatility's had a short term like peak and it should come lower. But in the medium to long term, volatility traders are out there saying volatility will be going higher over that time frame.
Yeah, and look, I mean, I like to have like an opinion on the market and say, yeah, it's going up or it's going down. But right now, we look at this VIX futures curve. It's clearly bid up higher than it has been in prior months. So to that sense, it's probably a little bit overdone to the upside. But then you look at some of the technicals in the market and the shape of this curve going out to October, saying there's going to be more volatility in a few months. And then I get back and I'm thinking, wait, maybe this more volatility leads to more selling in the stock market. And so I'm kind of on the fence on which way this market can break. I'd like to see some other things happen. I'd love to see the semiconductors, once again, take control of this market, which has been a leading sector to push things higher.
Yeah, we really are in no man's land. This is something going back to our trends here, Brian. This is something we've been looking at, and just in general, back to kind of our big story, just the trends of the market. So, very short term negative pattern, but we're still in this very defined uptrend here in the market. We've had a rising trend line since September of 22. It accelerated starting at the end of last year in 2023. So we're very much still in this channel, but we're very much in a period where prices are rising. The technicals are looking very good. Now we've been talking about this for a while. We went back and said when people were worried that the concentration was too low. Well, we said, well, it'll boil down to the technicals on those stocks. Are those stocks still going higher? Are they stocks still in those trends? And for the most part, they still are. All of them still very bullish. So this is very critical, though. We are lower. We're getting closer to some areas where I need to see some support in the market. But for me, we're still in these long-term bullish patterns.
Yeah, the bull market. I mean, when you look at that trend, the green line, the green trend going upwards, that probably marks 5,400 on the S&P on the downside. So, as long as it kind of hangs in there, certainly breaks below that 5,400 level. Now we're looking at maybe 5,000. We're looking at probably heightened volatility, and maybe that skew that we just talked about, where you get these extreme put buyers come in and freak out once this trend breaks, but the trend hasn't broken. So that's why I'm kind of still on the fence. I don't know if I dip in because we haven't touched the bottom end of this green trend line and put new money to work, so to speak. But I'm not also getting out necessarily from what me personally, I'm being overweight equities right now, and continuing to play this upside.
Yeah, and looking deeper like into the sector that's kind of the most important here, it's the semiconductor sector. SMH is the ETF. How does this chart look? Well, we're kind of at some important levels here. This 250 area is certainly important for me. But this is going back to Jack's question, Brent, at the beginning. Like, would you be buying on this dip? Yeah, I do want to buy more on the dip, but I want to have like a little more conviction. I want to see some levels being regained. I want to see some other people coming in too. So I'd love to see making a little short term break above here. That's really what I'm looking for. I'm looking for just a sign. Hey, we're not just making lower highs after lower highs. We're not just making lower lows after lower lows. That's not the time to buy. Time is to when you break that pattern and then you make a new relative higher high.
Yeah, and I think if we break this down even further, if we look at like let's say a 60-minute chart here on SMH, really it's like that 256 level. I'd love to see it trade back above there. That would sort of represent maybe like a little bit of just a carpet shakeout. See who's really on board on this bull market in the semiconductor sector area. Obviously, we had some words from Trump about oh, if he gets elected, Taiwan needs to pay for our protection. And then that had people freaked out about Taiwan Semiconductor and those associated with that and the manufacturing process. And that sort of caused the breakdown in the semis. But from a technical level, yes, it's kind of a double toppy formation. And I want to see it sort of get, a shakeout here before I want to step in. So today's going to probably be a critical day for the market. I would really be tuning in all day, maybe even to tomorrow and into that GDP number later in the week to see if SMH can start to trade back above the 256 level. At that point, I'm like, okay, maybe these guys can start to lead the market again, and maybe the rest of the market will follow back to the upside.
Yeah, it might be Google too. Just Google can have a nice strong quarter. It might be a sigh of relief for all the other tech names. Yeah, so we're very close to this level. I'd love to see it trading up here. Maybe kind of like a best case, come down, test here, and then go higher. That's really what I'd be looking for on buying more on this dip, rather than just going out and saying, hey, I'm going to buy some here just because it's lower. It's not good enough for me. I need to see some signs that the short term trend is shading. Now that said, I'm not dumping any of it. I'm still sticking with it. We did adjust some of this, Brian. Actually, last week we did shift some money around, taking some out of some semiconductors. But that said, this long-term trend for the market still very bullish. Still, we're at a point where volatility is more important than other times, I'll say, but not in a point where we should think about panicking or think about anything other than the technicals are still strong.
Yeah, I mean, you're right. We did lower some of the actual weighting that we had exposure to in the semis as we saw this market start to shift lower, as we start to see volatility pick up. But look, we'll be nimble. I mean, if this was just a carpet shakeout, we'll get back in and put that weighting back to where we had. But to your point, Joe, we're not getting out completely. That bull trend is still intact, and there still needs to be some exposure, and then there'll be names like, obviously not a semiconductor name, but a name I'd want to bring up, which has been in the news, CrowdStrike, which obviously had the outages occur last week, or it caused outages to occur. Now, what exactly happened? I think we'll get more news about exactly what went down besides just a security software update issue. But there's a name that got whacked hard. There were other semiconductor names that got hit hard, and those are names that I'd probably look to buy in if we can sort of break through back above these technical levels.
Yeah, and again, remember, we're at a point now. At the start of the year, Brian, we were talking about what this market needs. It needs to have a strong economy. We need to avoid to have the unemployment rate rising. We need to avoid jobless claims to start rising. And for the most part, this year has done that very recently. In the past month or two, we're starting to see some jobless claims rise. Starting to see a little bit of weakness in the job market. So if we are going to see a recession, this might be the start of it. So that would be something I'm just putting out there, maybe a month or 2 or 3 months down the horizon. Maybe that will be the economic data shifting, which is going to change everything. I think it's very possible we could see, these rally up here and then maybe turn down in a couple months, and not make a new high, and then I think you have a whole different bag of worms happening if we do something like that and get like this type of head and shoulders top-ish formation. That's something just aware of another possibility.
Now, do you think we get some patterning like that? Let's say we do see the economy slow down. Do you think the Fed can come to the rescue by cutting rates then, because rates are so high right now? There's been some talk that they would do that. When they actually start to cut, is that going to help, keep this market, be a buoy on the market and keep it up, its head above water?
Probably not. It'll still have a little bit of a shakeout. Now, how deep the shakeout will be just depends on how bad the job losses or how bad a recession is, even if there even is a recession. But we're starting to see job losses pick up. It usually just kind of has a way of accelerating on itself, and it's usually worse than people think. So if the job losses do start to come, if there is a recession, I think it'll be hard to avoid. Especially now we're not in a situation where there's a 50-50 shot or maybe a 30-70 shot that one of the parties that wins the election will be on a second term. Now it'll be a first term for whoever wins, and first term presidencies, usually year one is not the best year for the stock market.
Yeah, that's true. That'll be a concern that, hey, we've had all this bullish sentiment. Now we have a new person in charge, and then it's like, okay, maybe there's some uncertainty as to what that policy will look like over the next few months. And then the market starts to, have a little bit of a pullback. You get some rough economic conditions. I mean, Paul has indicated that they are getting prepared to cut rates, that they don't necessarily need to see inflation get back to 2%, and that they'll try and get ahead of it. So if they can get ahead of it, I think it helps buoy the market, like I talked about. But typically, Joe, as things start to shake out, volatility rises. It's like, oh, the Fed was maybe one step too late, and a 2 or 3 month shakeout needs to happen.
It just moves so slow. It's hard to be early for the Fed because they also have that risk of inflation going higher and being out of control. So it's very tricky for them to manage. It's hard to say. Historically, that's what happens, right? Historically, you got the inverted yield curve. When the Fed does lower their rates after a period of time, it's because they've cooled off the economy, and they just, it's a cruise ship. You can't park it, in a tight spot. It's very wide turns here, so it's very tricky for them to just stop on a dime and say, let's heat the economy back up and have it start just like that. Every 9 times out of 9 times there's been a recession with the yield curve like this. Um, is this time different? I mean, the only thing that is, I mean, this is a big difference, but the major difference for me is the amount of money the government's spending now, just like off the charts, way bigger than World War II spending, way bigger than the Great Recession spending. This COVID spending, which went crazy high, has just not stopped. So that might be the saving grace, which is going to save us from a recession, but it's too early to tell.
Yeah. Well, we've talked a lot about the election. I know a guy that's spending $1 or two on some campaign financing. Yeah, Elon Musk and Tesla. Here's a stock that has earnings on Tuesday, so we'd love to highlight a trade. I think, Joe, you have a trade for everybody on this. It's a stock that's sort of been in this downtrend, but then broke out. What do you make of where the stock's at, and what's the option trade?
Yeah, hard to believe all-time high a couple of years ago, 2021, above 400 here. Yeah, that was on a fantastic run. It's come a long way off of those levels, and it had this massive downtrend line where the red one here was very steady, making some lower highs. Finally, just recently broke that. I think that was great news. Now we're maybe in this slightly lower downtrend where we're going lower a little bit slower, but we're still in a downtrend here for Tesla. I don't necessarily know that we're going to break out of this range here where we have this red downward downtrend line here, this green downtrend line here. I think it's about 220 on the downside, about 285 on the upside. And I just kind of want to play that range. I think best case will trade up to the green line, worst case down to the red line. I think at the red line, it'd be a screaming buy to own Tesla. So that's how I designed my trade into this earnings event. I am looking at the August expiration, selling the August 220 put, buying the August 260 to 85 call spread. These options are very expensive, but this is a way to get in to the upside, only paying 50 cents for me. I need it to be above 260.50 for me to profit on it, but I'll make money all the way up to 285. And like I said, I actually will be priced into buying it below 220, which is something I'm comfortable to do given where it's been and the chart that I see.
Yeah, I think this is a trade. Like, if I own Tesla, which we own for clients, I have option positions on there myself that are in a bullish position to the upside. And I think when I'm in this is the kind of trade where it's like, should I add more to my position or not? And it's a yes if we trade lower, and it's really a yes if we can break through on the upside some technical levels, because I think that 285 level or so is going to be key, because we could quickly get to 300. If you look at resistance at 300, the next level stop is 400 after that. So, there's some technical levels that make sense on why Joe probably structured the trade as it is. And, you look at their paying 50 cents, that's basically, relative to the price of the stock. What is that, 20 basis points maybe that you're spending to have this on. So it's a very cheap way to sort of get some entry points into the stock at levels that seem favorable to the upside.
Yeah, I mean, and it also just for me, yes, I know people think I'm selling a put. There's lots of risk here, but I think it's actually less risk than owning the stock because coming all the way down here, it could be about a 10% drop there. Yet I'm not really exposed on that. I think that's certainly possible on earnings. Be happy to buy it after that, but I don't want to own it at 240, 245, and then be 10% lower if it does have a miss. So I can avoid that if it does happen. Yet if it does have a nice positive result, I'm there on the upside. If it does that, so kind of sidestepping it instead of owning it, I can get out of it, not worry about the downside as much, and still get some upside exposure if it does have a nice earnings event. It does have some nice momentum. Maybe there's some vibes that feel good with Tesla right now. Maybe some AI talk. Market might get excited about that. Short of that, I don't think it'll do much, and I think I'd rather just sit on the sidelines in this fashion.
Yeah, and I think what's going to be interesting too is Tesla is getting closer and closer to that that, robo taxi, right? Waymo, which is owned partially by Google, obviously has a big distribution network already occurring in Arizona, Phoenix area, San Francisco area. I think that technology, because I've ridden in that, and seen it drive relative to also driving a Tesla. And so that technology, I think, is a little more advanced, but Tesla is planning on to roll an upgrade, full self-driving software upgrade coming out here. I believe it's 12.5. And, if that starts to look better and they're getting closer and closer to this robo taxi style, there's a whole lot of more upside to occur on this stock.
Yeah, it should be fun to see. Maybe there's a little bit of election stuff going on. I don't really know, but I do know I like the way this volatility is laid out for me. I can sell some volatility into this event, still get that upside exposure, which I am looking to do.
Yeah, and listen, folks, if you got questions, continue to write in. We took one trying to give you some ideas live traded in the show. I look over here on my screen, the market, E-mini S&P futures trading now above 5,600, 5,610. Hey, look at the SMH right now trading 256.20. So we are above that level that we talked about right now. So, maybe the carpet shakeout, was a lot of the concern last week is, oh, Trump trade this, that, or whatever. But maybe it was just the uncertainty of Biden is getting ready to step down. What's going to happen? Now he's officially announced he's stepping down. So now the market can kind of digest that. And maybe we just had a little bit of volatility shakeout, and now it's getting ready to move back higher. So some key movement here, just as we're talking on the show. So we'd love to have questions, talk about it live, and really have a discussion. And it looks like
we got a question.
Yeah.
Thank you for the question, Max. Do you think crowd has a ripple effect on the market?
Well, yeah. I mean, CrowdStrike has taken a massive beating, but the reality is, okay, could there be some lawsuits that result from this or and whatnot? Yes, but beyond that, to me, it seems like they've really made a footprint in the marketplace to put them in position where they continue to grow. Look at their earnings, like literally the last 8 quarters, it's like 10% or more beats on earning expectations. They went from a negative earnings picture just a few years ago to positive earnings here. It seems like they have a strong footprint in the system on cybersecurity, which is a necessary thing. And so, they figure out this one little issue, and I think they're back on target. I would probably be adding to the position if the rest of the market looks a little bit more bullish, which maybe by the end of today's close does. And maybe, but CrowdStrike has had such a hard fall. It's tough to catch a falling knife, right, Joe?
Yeah, and I think it makes sense. No matter what, cybersecurity is going to be there. CrowdStrike's got this nice cloud cybersecurity component. Maybe some others can step into it and get some of that share off of this. But there's, this is a little blip for them, but there's no question people are going to need cybersecurity going forward. So I think CrowdStrike will do fine going forward. If they lose market share, maybe it'll go into Palo Alto Networks. I think it makes sense kind of owning both of them, Brian. Just because if CrowdStrike doesn't get it back, it'll go into Palo Alto Networks, but net, both of them will be higher, the pair.
Yep. All right. Well, that about does it here. Joe, we got to get back and we got to trade this market, because if this is turning right here, we might need to go put some trades on, right? This is Brian Stutland, Equity Armor Investments portfolio manager, with my colleague Joe Teague, portfolio manager as well. We're here to trade the markets with you in Trading Zone, sponsored by the MIAX, put on by the Tradier Network. So tune in every Monday, 1 p.m. Eastern on these Monday afternoons. Get back from lunch, see what we got to say, and we'll catch you next week.
Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.